Epicor and the concept of demand within the system. So we'll kick right into it. So Epicor is, as you understand, our ERP system. ERP stands for Enterprise Resource Planning. And it effectively comprises of an end-to-end system that takes care of all of our manufacturing and services and the work that we do here within TMT. So that's a fairly basic understanding of the system. This is a very high-level workflow, if you will, for standard jobs. There are obviously variations and tweaks and different things that we do, but effectively you come in. I'll just go with the laser pointer. Come in with your customer, you quote that customer. If you win the quote, it turns into what we call a sales order. That sales order then might go through the project or the PMO, Project Management Office domain, and get run through a project. Sales orders might be linked to specific milestones within the project, specific phases or certain other deliverables. Or if it's not direct to a project, the sales order goes direct to manufacturing jobs, which are used to deliver something. It could be delivering a service, could be delivering a product itself. Material purchases feed in to manufacturing jobs and labor hours, as you understand, your timesheet bookings. And what you can also do is items from inventory and sub-jobs as well. Once manufacturing jobs are completed, you then ship them. It's called a customer shipment. And at that point in time, the item is ready to be invoiced. And of course, once you invoice, then you have your revenue coming into the company. So that's just a basic overview of the ERP system and what I mean by end to end. So all the way from the sales, the front end, to the back end and the underlying system for finance and business performance. So what's underneath it though? So Epicor, while that is a manufacturing and a service system and used to manage all those aspects of the work that we do, it is a financial system underneath it all. And what that means is that costs will go from one area to another, goes to the right buckets so that we can effectively report on our business performance. We can adhere to accounting standards here in Australia, accounting standards where we're needed, report on those on a regular basis. So let's start here at the left. It starts at the lowest level here, materials and purchases that come in. So your purchase orders, your timesheets, your labor hours, stuff that we keep on the shelves and sub-jobs, all then feed into the next level, which is the job itself, right? So at this level here are the costs of materials, the cost of labor, and at this point in time, most commonly deemed as, potentially committed costs. The costs sitting in inventory are sitting on our balance sheet. They're sitting on the shelf until which time you consume it to the job. At that point in time, the costs move to the job. Materials on a purchase order, it's a committed cost until which time the purchase order is receipted. And at that point in time, the costs actually then hit your job, right? Move into the manufacturing jobs area. Once the costs have hit your job, the costs are then considered in the work in progress area or the work in progress account, right? So these are running costs and finance uses this area here to report and to forecast, right? There's a certain level of reporting they're required to do, and then they use that also for forecasting, things like cash flow and all of that. Once the manufacturing jobs are completed and you do your customer shipment and the job is closed, these costs actually move out of the WIP accounts or work in progress to the cost of sales account, right? And at this point in time, this is relating to accounting standards, they're required to match the costs of the work to the revenue that's generated. And so there's an accounting standard which says that the month in which you, recognize the revenue for certain work, you need to also match that to the costs of that work. So take, for example, the situation where it's not adhered to. If you invoice for a job, but you leave the job open, the costs are still in work in progress, you're recognizing revenue without recognizing costs in the same month, right? And they don't do that, or they're not allowed to do that. So what they have to do is make an estimate of it and accrue it, right? And that takes time to go into the system, look what's in work in progress, what should be completed, what's been invoiced, and all of that. So really having the cost move from one area to another and having jobs closed and completed very close to the invoicing time is a requirement, from an auditing point of view, from an accounting standard point of view, right? And then at the very end, you invoice and you've got revenue that comes in, and you've got your general reporting, you've got your balance sheet, profit and loss statement, you've got all your ongoing financial reports, which makes up, just the revenue as well as, inventory balances and the costs along that process. So this is really what is underneath everything. And this is really why everything in the system needs a reason. So every transaction that goes through has a reason for existing, or a reason for that transaction occurring, right? So why the concept of demand? So I touched a little bit on it there. The first one is every record. So that's your jobs, your purchase orders, materials, sales orders, has a reason why it's needed, right? So a job might be demanded from another job, from a sales order, from a project. A PO is demanded from a job, might be demanded from a requisition where you're buying stuff into inventory, various reasons. So that's one. Every transaction, as I alluded to in the financial slide before, moves costs and data from one area to another and moves it to the right places. So therefore you can effectively report on your business performance. You can effectively report on and understand your costs in a project at any one given time. So that transactional level is important. Why demand exists between records, your POs and your jobs. And the third reason, so that any given time you can understand how you're going, right? At the job level, at the project level, if you're running a project, as you very well know. So without the project transaction spreadsheet that you're running, without this concept and without the links between jobs and projects and sales orders, you won't be able to see that level of detail and won't be able to understand how everything's linked together. At the sales order level, so whether you're actually going to be profitable on a given piece of work, and ultimately the business, right, at any given time as to whether we're performing well or not, leading, lagging indicators. So let's go into a bit of an overview. So at the very top level, and I'll dive into each of these in detail. You've got your sales orders, you've got your jobs, you've got inventory, which are your warehouses, and you've got the expenses, right? So if we look down here at the job level, any given job, so this is a manufacturing job as opposed to a maintenance job I'm talking about, any given job can have one of three demands. It can either be demanded by a sales order directly. So you will see that, for example, in the job query dashboard, you'll see that in the job tracker at the very bottom. I'll go into Epicor later on to show you these. You will see what's demanding it. What is the requirement for this job? A job can also be demanded for by another job. So that's in your projects, the concept of jobs and sub-jobs. So your phase jobs in projects can demand manufacturing jobs of Malta's team below that in the production department. And the third way is a job can be demanded for to inventory, right? And that's the demand is a warehouse. So for example, the C building or the West workshop or a specific shelf where you store, like the bunker where you might store, important ROV tooling, equipment, hot stabs, things like that, right? So inventory, right? Then on the purchase order level, there's one of four things which can demand any given item on a purchase order. The sales order, direct. This is less common, but we are starting to use it mainly for specialized scenarios that don't really sit in your domain in projects, but sit more on the back end office and contracts type level. Ongoing contracts like like certain costs and building costs and things that we need to invoice people for that we're paying for first up. A purchase order can be demanded from a job. So that's your purchase direct concept. You're buying materials to a job, and you do that a lot because you're costing the cost of items that you buy into specific jobs or projects. It can be bought from inventory. So a specific warehouse can demand items, or you can demand items to be delivered to a warehouse. And of course, business expenses. So, you know, your overhead expenses like IT, professional fees, training, and things along those tend to be more service related, but like your IT equipment, it's all going to our business expenses area. So that's a very broad overview. Let's dig into each of the details. Sorry, sales order. So in the scenario that we're talking about, a sales order demanding to a manufacturing job or to inventory, this is the concept here. So when you look at a sales order record, you'll notice there are 3 different areas. You've got your sales order header level, you've got your sales order line level, and you've got your sales order release level. Now, each of these plays a specific purpose, and let's go through each one. So at the sales order header level, this is the top level, right? In terms of a hierarchy, you define your customer, you define your currency, and you define other information like the salesperson and maybe overall dates, right? That's the top level. This is the stuff that when you first create a new sales order, you need to define first up. And if you get wrong, you effectively need to create a new sales order, right? If it's a different customer or different currency. Then at the line level, this defines the parts or the items that you actually require. So that's the definitions like your part number, your part description, and the overall quantity, right? So you may have 2 different parts for line 1 and line 2, requesting 2 different quantities. The release level is the kicker. So this is the one which actually defines what we call the demand within the system. So a given line can have 1 or more releases. Many of the cases within our system are just 1 to 1 to 1. However, there are situations where it might be 1 to 2, 1 to 3, etc. Right? Let's go for the simple scenario first. Sorry, if we look at line 2, we're requesting this item, quantity 1. There's 1 release. The release is requesting it to be made in the job, quantity 1, and this is the job that it's linked to, job 102, right? So when this job is done, it's receipted up and shipped to fulfill this release line. So that's a simple demand. This line, single release, demand to a job. In the more complex scenario, you may have line 1, quantity of 3 items, release 1, quantity of 2 required by being made in the job 101, and 1 required because we have it on the shelf, right? So we're going to pull 1 from the shelf, we're short of 2, we're going to make 2 more in the job, right? So again, it doesn't happen as often here because we don't often, we're not like a distribution center where we pull stuff off shelves, but look, we do have certain sparing and things like that, which we may sell on to customers, which we may have on the shelf. So that's quite important. And you can see that here, the release level actually defines where the demand is coming from and where you're going to fulfill the requirement of these parts. Yeah. Cool. All right. Job material to sub job. So now if you focus down on the job level, a given job, you again have different levels. You've got the job header, you've got the job assembly, you've got potentially sub assemblies, and then you've got the sub job. So let's talk about the job header level. Again, hierarchy, highest level, defines the planner, defines the production quantity, that's how many you want to make of this item, defines the part number, and of course, things like the dates, right? Then there's always an assembly 0, top level assembly. And that's the part number that you're actually making at the top level. If you have a full complete BOM, it will be the top level assembly number, and then you have the sub-assemblies below it. And that's where the sub-assembly component comes in. So let's look at this scenario first. You may have assembly 1, you've got an operation to deliver that assembly. Operations are tasks or things required, you can book time against it, and this is for people to actually do something with that assembly to deliver the product in the end. And you might have to purchase something to fulfill that requirement. If you have a sub-assembly linked to this parent assembly, then you have an operation on that level to deliver that specific item. And you may have certain things which are called materials that are used and you decided to make these in a separate job. Now, you might do that because, let's say, example, the more complex systems, you may want to break it down. So Malta may decide in the production department that this is quite a complex job. He puts the highest level assembly in job 1, right? And then he may have some of the sub-assemblies with material line items to be made in sub-jobs, and he might farm it out to different engineers. Or you might make a sub-component or sub-assembly might be fully an electrical system, and that gets farmed out to the electronics workshop to make that item and then deliver up into this job. So that's the concept of make direct, and this then demands a sub-job, right? So that's how the sub-job level comes in demand, and it comes in through a job material. Job material to PO. So pretty much the same scenario, except now we're looking at this area here where you've got a material, it's used to do this task to deliver this assembly, and you need to buy it in because this part is sourced externally from a vendor, right? So then you set it as purchase direct, and it demands a PO number 71525, right? So that's fairly simple, and that's quite common in a lot of our jobs. We do many more purchase direct items than we do make direct items, but the two are both used within our system and within our workflow here at TMT. Now let's focus on the purchase order. So in the scenario where you're buying something to a purchase order, again, very much like a sales order, you've got the header, line, and release level, and each of these has a specific reason. And again, it's similar to a sales order. The PO header level defines the vendor and the currency, right? Who you're buying it from and what currency we're paying them in. The line level defines the part specification. What's the part number, what's the part description, and how many you want. So let's go through each of these scenarios. Simple one first. Let's say this is a service. You might be delivering something like training or something like that. We don't use the TMT part number for it because it's an ad hoc requirement. It's once off. You don't do this often. So we use a part on the fly. It has a release of 1, quantity of 1. So 1 line, 1 release, and it's expense direct to IT expenses, for example, or some other like our training overhead expenses, right? Line 2. This is a part, a thing. It's a part number from our TMT database. The release is 1, and it's being required by this job. So that's the scenario that we talked about just before, where you've got a job, you've got a purchase direct item, you want to purchase it direct to this job, and that's how it looks on the PO level when you're looking directly at the PO. You see that line, you see 1 release, and you see it's going to be fulfilled in this, it's going to be delivered to this job once the PO is receipted. And then at the top level here, you've got the scenario very much like a sales order, single line, 2 different releases. Quantity of 2, it's being requested by this job, but at the same time, you're also buying extra into inventory, right? So that's a scenario there where you're both having items purchased and delivered directly to a job, and you're having items that you might want to store on the shelf. Or it could be 2 independent people, you know, somebody is running this job and they need these 2 items. We've set a min-max quantity on the warehouse, which is fallen below stock and is required to be replenished. Or somebody has decided separately that they want to purchase something to keep on the shelf for spare, right? So this is the scenario that I was just alluding to of the case where you might set min-max quantities, right? So this is the case where an inventory warehouse then demands something to a purchase order or to a job. So on the warehouse, you have certain parts which might be on hand within the warehouse. There's a certain on-hand quantity, and you might set on the part setup a minimum quantity required. So when it falls below that level, then the system will either generate one of 2 things. So we run the process is called MRP, which is defined as material requirements planning. And it pretty much looks at this setup and says, right, for each of these parts, is it typically manufactured or typically purchased, and you set that up on the part level. And then if the minimum quantity, the on-hand quantity has fallen below the minimum quantity, the system will then suggest whether you either need to make this item or purchase this item, right? So that then creates suggestions. So it either creates PO suggestions or job suggestions. And then ultimately then the users or the purchasing department, like Malta, for example, can create a job to go and make it. And the purchasing department can raise a purchase order to fulfill that to inventory. So that's a very simple scenario. We use this a little bit. We use this for certain components in the electrical area. I think some of their potting agents and things like that. And we're starting to use it a bit more and more. And eventually we're going to use it for our RV systems. Owen is planning to use it offshore as well. So once you set up his sparing requirements, you'll have those auto-generated. Then you don't need to worry about it. Reduces the amount of human processing time once you have it all set up. Cool. All right. So just in summary, we've talked about the different scenarios there. Any given job, 3 different types of demand: to a sales order, to a job, to a warehouse. Any given purchase order, 4 types of demand: to a sales order, to a job, to inventory in a warehouse, or you expense it directly to our overhead business expenses.